Hello and welcome to Intercontinental Investment. This analysis is for Intercontinental Exchange on the New York Stock Exchange as of 31st of July 2026, with a share price of $152. The full report is on dohnatchin.ca. Sign on. A buy across all three horizons at $152.85, a wide-moat exchange and data compounder. But it's a half-size starter, not a full position. The stock is overbought after a sharp 4-week run, so we take a partial stake now and add the balance on a pullback to $143 to $147. ICE is a wide-moat toll network. It owns near-monopoly benchmark franchises, ICE Brent, US natural gas, the NYSE listing venue, where liquidity is self-reinforcing, and it layers a large and growing base of recurring subscription revenue on top, roughly half of net revenue. Quality scores 80. Operating margins run about 52%, elite for any sector, and return on equity is 14%. The freshest print, second quarter 2026, showed net revenue of $2.70 billion, up 5%, with recurring revenue up 7.7%, the shape of business we want. On valuation, it scores 63, fair, at the upper end. The clean forward multiple is about 20.5 times against a warranted 20.8 times, so the shares sit almost exactly on fair value, not below it. Enterprise value to EBITDA is 15.1 times, and the free cash flow yield is 2.9%. Reasonable, not cheap. The pull upward is the street. 89% of analysts are bullish, and the consensus target of $178 is about 16% above today. So it's fairly valued with real upside to consensus, a quality compounder at a fair price rather than a bargain. Here is the discipline. Timing scores 49, neutral. The stock has run about 25% in 4 weeks off its late June low into the 200-day moving average at 154.76, with the daily momentum gauge at 74, overbought, and it actually faded 2% after the earnings beat. Good business, poor entry right now. You'd be chasing a vertical move into resistance. That is why this is a half-size starter. One of 3 entry paths is open, so the framework takes a partial position now and adds the balance on a pullback toward 143 to 147, where the stop tightens and momentum resets. The risk is loud and near term. Because the shares are overbought into resistance, a pullback is the live danger. The bear case is $120, a roughly 21% fall and a retest of the 52-week low. If the 4-week rally unwinds and volatility fades while energy volumes keep sliding. Higher for longer rates cut both ways. Good for float income, but they can stall the mortgage technology recovery that part of the upside leans on. And the near-unanimous bullish consensus is itself a mild contrarian caution. None of this breaks the long-term thesis, but it's exactly why the position is half-size, not full. Now weigh the risk against the reward. The bull case is roughly 37% above today, the base case, the most likely, about 16%, and the bear case a fall of about 21%, so you are risking about 21 to make 37. So, our call on Intercontinental Exchange, on the New York Stock Exchange, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Intercontinental Investment at dohnatchin.ca. The link to the full report is in the notes below. Have a great day.